Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Welcome to this episode of the Finovate podcast. Joining me today, we have Stuart Sapp, the CEO of Current. You may have seen Stuart on our digital stage at Finovate Fall Digital last week. You may also recognize Current from the Finovate Awards, where they won the Excellence in Financial Inclusion Award. Stuart, thank you so much for taking time to join me today.
Thank you, Greg, for having me here today.
My pleasure. So for anybody who doesn't know about you, can you start with a quick 60-second overview of what Current is all about?
Absolutely. So yes, Current is a challenger bank based here in New York. And the TLDR, before you hear my dulcet tones, is we bank people without much money. People who are living paycheck to paycheck in America. That is about 120 million people living on sort of 55 to 65K household income, third of America. And of course, the pandemic of this year has probably increased that number. So Current solves a problem around cash management. When you're living paycheck to paycheck on a FICO score, say, below 650, 600, you don't have the luxury of managing your bills and your finances on credit rails paying once a month. Typically, credit is particularly expensive for you. So you're living on debit card rails and you need to meet your financial obligations as quickly as possible. You need to avoid fees, those late fees if you've missed a bunch of bills, further debt and negative consequences that would be owing other people money, and that could be friends and family as well. So we focus on three things: moving money faster and cheaper than anyone else, managing your money so you understand and where it's going and at what time. And then really focusing on like how we can help you manage those bills and that sort of accounts payable at the back end. We're a more relevant and affordable solution. This solution has been solved because banks here in America focus on accumulating assets, deposits, tons of reserves. There's no shortage of money in the system. And their business model means that they are focusing on people with those deposits. And of course, this large amount of people in America living paycheck to paycheck, even in aggregate, don't have sticky deposits. It's all spent on the day that they get paid. So providing a particularly large opportunity for a company like Current to solve.
Excellent. No, and the more I learn about Current, the more I'm fascinated by what you guys are working on. And we're going to come back to some of these specific pieces. But I'd like to take a step back and really talk about the way wealth inequality is being systematically reinforced right now in our financial system. I know this is something that you are passionate about. Can you give a broad strokes overview of that problem and just how pervasive it is?
Yeah, absolutely. So being an old macro trader, I was a trader for many years. So I've got a very specific view from why this is happening. Since 2008, we've printed more and more money to sort of save the system, as we've seen, and that's had some perverse effects. Meaning, if you have assets, it has inflated them. So you had savings, you're sort of balancing your personal books, and you can accumulate savings, and then you've sort of gone into investing. That's created the stock market rallies that we've seen over the last 10 years. We've just seen that again very recently. If you are living paycheck to paycheck and living slightly negative, so you're not balancing your books, you've had to take some debt to help. That has been good in the sense of, debt is fairly cheap, but it enables you to roll that into, quite a large problem. Then you take the overlay of, wage deflation from globalization. And, that's a whole another discussion about, trade wars and all the rest of it. But that has really painted a large demographic into a corner, meaning that, yes, you can work 2 or 3 jobs that are fairly low paying, but you'll have to take some debt as well. And you're really never getting out of this spiral. And so, and along with all the late fees and penalty fees that typical services like financial services as well as telecoms and such charge to people who can rarely pay it, it really reinforces, unfortunately, for people who are working very hard, Americans not being part of this American dream that was once for everyone here. So very pervasive, third of America, and increasing because those forces have really not changed. And of course, again, we could talk about the political sense of why people are trying to change this in various ways.
Yeah, well, and certainly there are political issues sort of right in the offing here. And there's the idea, too, that a lot of the administrations, a lot of government officials sort of look at stock market performance as the key indicator for what the economy is, how it's doing. But obviously, that's not even close to the entire story. There are massive amounts of people who aren't involved, who aren't participating in that at all. And so, a stock market recovery is not an economic recovery by any stretch of the imagination. And so, I mean, the size of the problem is really quite immense. How does Current address it? You mentioned a couple of the pieces that you in the opening that Current is working on, but what are you offering that other banks aren't, and why does that help?
Yeah, that's a really good question. The stock market is not representative of the real economy, and that has been an unfortunate learning for everyone, at least this year, if they haven't learned it before. Yeah, in terms of products that we differentiate. When you think about the banks and their business model, like I've just sort of narrated, their business model is really their core KPI is to go and accumulate assets and lend them out. In terms of this demographic, they're not very attractive to banks. So they have high fixed fees, overdraft fees, all sorts of other sort of minimum deposits and things like that. And that's how they've got their effective interest rate. By differentiating to banks has been fairly easy. We are deposit agnostic. We do not focus on asset accumulation for obvious reasons. And so we've really focused on a interchange model as well as getting for our revenue. So we're aligning ourselves with our customers on their spend because they're very spend focused. Faster direct deposits really important. So when we see that file from the Fed, we've built our own banking core. And so when we see the employer file from the Fed, we affect it immediately. And so that hits their bank account sort of a Wednesday if you're being paid on a Friday. And again, that helps that knock-on effect of negative consequences of not meeting your financial obligations in various bills and people that you owe. We also are the first and only fintech in America to offer points reward system on debit card rails. We just had a few merchants go live the last couple of weeks. For our members, saving money is not an option, and also APRs and APRs probably don't mean much to anyone now for the next 5 years anyway. But it certainly meant nothing to our members. Having $10, $100 on the in a savings account really didn't mean that you could meaningfully save and do anything with it. So the biggest savings that they will ever get are top line discounts. So working with merchants, making sure that we can help on attribution and lift in terms of loyalty is a really exciting thing. It's democratizing effectively what more affluent people get through their credit cards, of course. And so being valued is really exciting for our members. And another couple of things, we do cash deposits. That may be weird in this more sort of socially distanced world, but if you're trying to make ends meet and you're working 2 or 3 jobs, you're probably taking tips, and a lot of those are in cash, or you're doing odd jobs. Well, of course, if you want to rent a car or do something, go and see someone who's elderly or sick, you need a car. Car rentals don't accept those. And so being able to deposit cash in a local area is extremely exciting, and digitizing cash in some way, so that opens up where our members could actually spend. And then, of course, gas hold refunds, which I'd love to go into, but one of our more nuanced products whereby at the gas station you would get the with authorization hold credited back to your account as soon as we see it. So opening up liquidity for our members. So really centered around like cheaper, faster money as quickly as possible.
Yeah, no, there's a lot of different pieces there. And one that really, I think people who aren't in this struggle don't appreciate as much as you probably would tell us to, is the idea, getting the liquidity that comes from being able to deposit paychecks 2 days earlier, to a lot of people who are sort of on the right side of the curve, the more privileged side of the curve. You just think, well, what difference does that make? But I think it's worth exploring that. So can you talk a little bit about how big those 2 days could be, the difference between getting paid on Wednesday versus getting paid on Friday, and how important even that seemingly simple, I'm sure it wasn't simple to produce, to code by any stretch, but for that simple step, how big of a ripple effect that can have?
Yeah, it's massive. So I've had this conversation over many years now, explaining to people, how much of a difference even $10 or $20 makes to someone who's living paycheck to paycheck. It's absolutely massive. And so when you're talking about, payroll early, it turns up on a Wednesday night instead of a Friday morning. That difference means that now I can pay my telephone bill. Now I'm not. Now my phone is on. Now I can go to work because I'm working for Lyft or Uber. That means that I can go to work. It means I don't have to go to an alternative financial services sort of place to get a payday loan for $200. That costs 200%. It means that I don't get those penalty fees. It means I can turn on my electricity. Now my refrigerator works, so I haven't spoiled my food. That would then have cost me another $50 or $100 that was in there. And these stories are not one-offs. They're not one-offs. It's an unfortunate state of American life when you're not balancing, but you're not being paid enough is clearly what the issue is. We're not valuing people's work enough. And there's not enough protections, but that we could talk about that. And so, they're having to live always in a crisis. We've all had to live in a crisis this year, and our members always live in a crisis. And for them, they're always trying to make sure that they go positive. And so it's extremely stressful. They don't have the right tools, and not enough people are trying to build things to help them and lift all boats in this economy. And so, the knock-on effects are just gigantic. It's thousands of dollars a year when you sort of add this up. And when you think about thousands of dollars a year, sort of post-tax on an income that is sort of like 25 to 35K, well, that's a significant difference to their life.
Yeah, no, absolutely it is. And I think one thing that, there are maybe some positive aspects you can take out of the current situation with the pandemic. And one thing that I hope people take away is, what it feels like right now to be in this moment, that to experience this type of crisis and to feel this uncertainty. And I think everybody right now is feeling it. And for a lot of us, it's a new feeling, right? It's something which we are struggling with for the first time, and it impacts every aspect of your life. And then to be able to take a step back from that and think, the massive percentage of Americans for whom that feeling is not new, for whom this level of stress, this kind of pervasive undercurrent of uncertainty is always been there. And then thinking of what that does to your overall quality of life and your ability to be present when you're home with your family, and your ability to make plans for the future and to anticipate being able to move to a new home at some point or build some sort of brighter future. It's really mind-boggling to think about it. And so, maybe, and I sincerely hope this, I hope that everybody who is experiencing this kind of feeling for the first time would take a moment and think about people for whom this is their everyday life, for whom this has been a decade or more of feeling it like this. And obviously, the lack of progress being made by government, by anybody who's looking to reform the system. And again, we could talk for a great length about those factors, but at the end of the day, it really comes down to kind of humanizing people and letting everybody have this idea that you can build for something, you can save for something, you can get to a cleaner financial future. So, it's really impressive what you guys have been doing, and it's really easy to see why you were selected by our judges as for that excellent in financial inclusion category, which is an incredibly competitive category, which again is really positive for the state of fintech to see so many people, so many companies targeting financial inclusion and really doing excellent work. For you guys to come out on top of that pile, I think is very well deserved. So, I realize we've gone a little bit over our time here, which is totally fine. I think we could probably do another 2 or 3 episodes easily together and have a good conversation. But we will leave it here for today. Current is the name of the bank. Visit current.com. Check them out in the App Store. I've been speaking with Stuart Sapp. Stuart, thanks again. Been a really pleasant conversation.
Oh, thank you, Greg. And thank you very much for the award again. It's greatly appreciated by everyone at the company. Thank you.
You're very welcome.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.